Tech stocks have been driving the stock market's growth for over a decade now, but picking the right one might be overwhelming or frustrating. What if you could get a part of the whole tech era through one investment choice? In today's video, we're going to be taking a look at three of the top contenders that can do that for you, give you exposure to the top tech companies. We'll be looking at Fidelity's FTEC, Vanguard's VGT, and Spider's XLK, putting them up against each other to find out which tech ETF deserves a chance to be added into your portfolio. So let's get started. We'll be talking about the cost, the growth, the risk, and why not getting started investing, just waiting around, could really cost you. I am Lisa J. Stocks. Make sure to like, subscribe, hit that notification bell, and come with me on this journey to become a smarter, more informed investor. So all three of these are passive tech-focused ETFs, but there are some differences, including cost and liquidity. First, let's start with a quick overview. FTEC is Fidelity's MSCI Infotech Index ETF, and MSCI stands for Morgan Stanley Capital International. It's an index that's widely used by investors and fund managers to benchmark performance and guide portfolio decisions. Then we have VGT, which is Vanguard's Infotech Index Fund ETF. It follows a similar MSCI index. And last up, we have XLK, which is a tech select sector spider fund. All three of these funds rebalance quarterly to stay aligned with their indices. XLK may adjust a little more often to account for things like mergers. This keeps them true to their tech focus. So now let's get into the detail of these ETFs, starting with FTEC. This fund, as well as VGT, are broader. It has 300 holdings, those tech giants like Apple and Nvidia, as well as mid-cap companies that you may have heard of like Snowflake. It has an extremely low expense ratio of 0.08% and trades significantly less than the other two funds that we're going to be taking a look at. This one trades about 500,000 shares daily. Now, taking a look at VGT, it has about 321 holdings. Again, heavily weighted in those industry leaders that we know, like Microsoft and Nvidia. It has an expense ratio of 0.10, and about 2 million shares of this ETF are traded daily. And while I was taking a look at these two, I noticed that there's a little sliver in the sector breakdown when it comes to VGT as well as FTEC. A few other sectors that are mixed in there. So I took a look out of curiosity to see what companies are mixed in these tech funds. A couple that I found are Fair Isaac Corporation, which is the company behind our FICO scores, Visa Incorporated, both under financials, and Motorola under industrials. And the reason why these are mixed in here, because they have a strong tech component. Now on to XLK, and this has a leaner portfolio, and there won't be any Visa or Amazon or anything sneaking in here. It is 100% tech. It has about 68 different holdings, an expense ratio of 0.13%, and is more liquid with 8 million shares traded daily. So all three of these funds have delivered tremendous returns over the last few years, powered by tech's relentless growth with companies like Nvidia and Palantir. Here's how they stack up against each other. You'll see as I add them into this chart that the performance is nearly identical. So we have FTEC, BGT, and XLK. On the year, over the last 5 years, or even out to the last 10. They're pretty much overlapping. But let's run through the numbers of each fund individually. To date, FTEC is up 12.16%. Over the last year, up 27.14%. Over the last 5 years, 123.8%. And we saw here that each of these funds over the last 10 years is up over 600%. FTEC is the newest fund, which dates back to 2013. Now let's take a closer look at VGT. Year to date, it's up 12.10%. Over the last year, up 27.03%. over the last 5 years, up 122.48%. And this fund was created in 2004. And now our last fund, XLK. The lean, more focused on, which has been around since 1998. Year to date, it's up 12.87% over the last year, up 24.85% over the last 5 years, up 122.19%. So pretty much all neck and neck over the long run. But XLK does have the potential of edging out the others because of its heavier bet on big tech. So taking a closer look at what each of these funds holds, we see that FTEC is most concentrated in Nvidia, Apple, and Microsoft, while XLK spreads its weight more evenly across the top 10, with slightly higher allocations in Oracle, Palantir, and IBM, while VGT is kind of in the middle, tech heavy, but slightly more diversified than FETC. So XLK's performance is highly tied to Apple, Microsoft, and Nvidia continuing to dominate, while FTEC and VGT, with so many more holdings, give you exposure to those emerging tech names. This is something for you to consider. Do you want to be more concentrated into those big names or owning a slice of the future of technology? Let me know in the comments. Now let's talk about why investors love these ETFs. First, low fees, higher than funds that give you exposure to the S&P 500 and total stock market, for example. But for the big tech exposure and growth potential, these are a few of the top options. So all three have expense ratios under 0.15%, aiming to keep more of your money invested and in your pocket. Because they're ETFs, they trade so much on a daily basis. They're very easy to buy and sell without wasting any money to fees. Of course, that appeal of exposure to tech, AI, cloud computing, semiconductors, fintech, all things that are driving innovation of tomorrow, and that growth potential. Being on board to take advantage of things like generative AI, which is the ability to create new content like images and music, and 5G, the newest fast wireless networking. So all investors have been loving these type of funds because they are simple, proven, and powerful. We don't have to know how to pick the next Nvidia or Palantir. We can just invest into a basket of stocks like these three options. When it comes to individual stocks that I have added to my portfolio, it has been predominantly tech, and those investments have done well for me. But to keep it even simpler, if you're not ready to invest into those individual companies, want a more set it and forget it approach because these will rebalance. These are all definitely things that you can consider for your portfolio. No investment is perfect, so let's go over a few of the risks. These companies have been the leaders. They've been driving innovation, leading when it comes to R&D, margins, and they've been able to handle growth easily. Big companies like Microsoft and Nvidia have been dominating not just in the US, but globally. From Nvidia's chips to Microsoft's cloud computing, these companies are the heart of the AI revolution. They've shown their resilience and their ability to bounce back faster than other sectors. So if you are aiming to build wealth through your investing, tech exposure is not optional. It's basically the foundation. Whether you go with a tech-focused ETF like this or stick to the S&P 500 investments, you're going to be very heavily weighted into these top tech companies. But the way that these funds are structured, when those tech giants have volatility, your portfolio could be hit hard. We saw this in 2022 with a huge tech sell-off. There's always ups and downs in the stock market. So remember, XLK is more concentrated. So when it comes to volatility, it will be amplified more when it comes to that fund. While FTEC and VGT, with their broader exposure, can cushion the volatility a bit more. So as I said, these are 3 ETFs for you to consider as a part of your portfolio. Balance these with others that will give you additional exposure to other sectors and help you to create a balanced portfolio. And when it comes to these ETFs, these are funds that you are going to be investing in and focused on for growth, but they all pay a quarterly dividend, a modest one. FTEC is at 0.43%. XLK is at 0.59% and VGT is at 0.45%. Overall, which fund is best? It depends on your investment style. Do you want broad exposure with low fees? Then you would go with FTEC. Do you prefer Vanguard's legacy name? Then VGT would be the choice for you, slightly more holdings and a higher expense ratio. Or do you want to go for that concentration into those big names? Then XLK would be the right fit for you, but also remember, it comes with that highest expense ratio. And as we saw, all of them have pretty similar returns as far as their long-term performance. Take a look at your portfolio, decide if you need more tech exposure for the long term, and if one of these is a good fit. Let me know in the comments, are you already holding one of these in your portfolio, or did this breakdown help you to make the decision that's right for you? If you're not already, subscribe, give this video a thumbs up, hit that notification bell so you can keep up with all of my videos and live streams. Check out my referral links, so be in the description. Remember, I'm just here sharing my journey to strive for financial freedom. Thanks for watching. Okay, bye.